What's up everybody? In today's lecture I will teach you an ICT trading strategy which needs absolutely no daily bias, and this strategy can be used in any market if it's crypto, forex, indices, or if it's Indian market. Okay, and the special thing about this strategy is that you don't need the concept of liquidity, you don't need any difficult terminologies. It's a simple strategy. All you have to do is manage your risk, and if you take 10 trades with this strategy, 8 out of 10 trades will be winning trades. I can assure you that. But you have to manage the risk. If you can't manage your risk, it will be of no use. Everybody can use this strategy, but not everybody uses it with the proper risk management. So risk management is the key. So in this lecture, I will give you two examples, a bullish one and a bearish one. Okay, and I will use two time frames, the 4-hour time frame and the 15-minute time frame. And here you can see I am using the GBP USD chart. This strategy works on every market, but it works extremely well on the GBP USD pair. So the sequence of the lecture will be, first I will teach you the bullish example. Okay, we will use the 4-hour and then we will shift to the 15-minute, and then I will teach you the bearish example, and then after that I will teach you how you can manage the risk, what will be your stop loss and what will be your target. Okay, so this strategy is of no use without proper risk management. So make sure to watch the whole video and it will help you a lot in your trading. So let's start from here. Okay, we will study this area. In this strategy, what you have to do is you have to look for swing highs and swing lows. What is a swing high? First we will discuss the swing low. So if you get a candle like this, a down closing candle or a bearish candle, and then you get another candle which makes the low. So this center candle will make the low, okay, not these two candles. Okay, this one will make the low. So this is your swing low. You can see this candle made the low and there are two candles at the side. So this is your swing low. Now what is a swing high? Like there will be up closing candles like this. Let me color it green. Okay, well, let's suppose there is another one, then you get another candle, and then you get another candle like this. So you can see that here this candle made the high. So this is your swing high. As you can see here, this candle made the high and not these two. So this is your swing high. This is another swing high. This is a swing low. This is another swing low. This is another swing low. So you can find it everywhere on every time frame. But in this lecture, we will use the 4-hour time frame and the 15-minute time frame. So now let's discuss the bullish example. So right now you are seeing the 4-hour chart, and we will mark the swing low here. The first thing that you need to do is mark the swing low. You can see this center candle made the low, so we will draw a line here. This is the first thing that you need to do in this strategy. Mark the swing low and draw this line on the 4-hour. Now on the 4-hour time frame, what you have to do is you have to wait for the sweep of this swing low. This line that you have drawn, you have to wait for the price to go below this area, and you can see the price went below this horizontal line. This is the second thing. Okay, first thing is you have to draw this line. The second thing is you have to wait for the sweep. Now the third thing, on the 4-hour time frame, you have to wait for the price to close above this horizontal line. Like the price will sweep this swing low, but it will close above it. As you can see here, the price went below it and then it closed above it. This is what you have to look for on the 4-hour time frame. Three things. Okay, first you have to draw this line, mark this swing low, wait for the price to sweep this swing low, and then wait for the price to close above this horizontal line. And all the three conditions are met here. What you have to do now, you have to shift to the 15-minute time frame. So this was our area of interest. You can see this was the swing low, we got the sweep. Now what you have to do on the 15-minute is you have to mark the last swing high that was made before sweeping this low. You can see this was the low. Okay, so you have to mark the last swing high that was made before sweeping that low, and you can see this was the last swing high that was made before sweeping this low. So we will mark this area. So this is what we did on the 15-minute. The first thing that you need to do on the 15-minute time frame is mark the last swing high that is made before sweeping the low. Now the second thing is you have to wait for the price to go above this horizontal line and close above it. Okay, you can see the price went above it and closed above here. Now these are the two conditions. Once these are met, you have to enter into a trade. Once the price goes down to this swing high and touches this is where you will enter. Okay, we will discuss the targets and the stop loss later. Let me teach you the bearish example now. Okay, it's the same but exactly the opposite. Let me show you. So here you can see again we will mark this swing high. Okay, in this case we marked the swing high. In the bullish case we marked the swing low. So you can see the price went above it, okay, and then close below it. So this is what you have to look for. You have to mark the swing high, wait for the price to sweep it, and then wait for the price to close below it. Now you can see that the price closed below it, but then again the price swept this high and this high. So I will explain why we got this second sweep. Okay, like we enter into our trade once the price sweeps this high, but here we got another swing high. Okay, another sweep. So we will shift to the 15-minute time frame and we will look for the reason of this second sweep. So this was our swing high, the price went above it, swept this high. Now what you have to do on the 15-minute time frame is mark the last swing low that was made before sweeping the high. So this is our last swing low that is made before sweeping the high. So you can see that the price came down but it didn't close below it, so we got the second sweep. Like there was no entry here. Okay, so it doesn't matter if the price swept this high again. So the price came down, it swept this high again, but then again it came down and it closed below it. Now this is our area of interest. This is where we will enter into our trade, not here. Okay, this second sweep will not harm you. Okay, once the price closes below it, and then if it goes above it, this will harm you, not this one, because your entry is not here, your entry will be here. Once the price closes below it and then touches this line, this is where you will enter. Okay, now we will discuss what will be your target and stop loss. So in this case here, this is where we entered. Our stop loss will be below this swing low, but around 5 or 10 pips below this swing low, because usually there are spreads and your stop loss will get hit even if the price is around here at this area. So you have to keep the stop loss below this swing low, 5 or 10 pips below this swing low. Now what will be your target? You can see this RR, you will target 2.4 RR. Let's see what is our target here. 2.4. So this is our 2.4 RR, and you can see we got our target. We entered here and this was our target. Now in this case again we entered into our shorts here. Our stop loss will be above this swing high again, 5 or 10 pips above this swing high, and again you will target 2.4 RR. Let's see if our target is met. So you can see this is your target, 2.4 RR. So this is how the strategy works. Okay, the RR is pretty much awesome. You can see the stop loss is tighter as compared to the target. The target is awesome. Like these are let me show you. This is 100 pips, or this is around 112 pips, and if you look here, this is 104 pips, and the stop loss is around 40 pips. So the RR is good, and 8 out of 10 trades will be winning trades. There's a possibility that 10 out of 10 trades will be winning trades if you go with the rules. You have to follow on the rules. Okay, all the conditions should meet, like the price should sweep, okay, then the 4-hour candle should close above it, then you have to wait for the 15-minute candle to close above the last swing high that was made here, and then you will get an entry. Okay, same is the case here. Once the price closes below the last swing low on the 15-minute, okay, before sweeping the high, this is where you will enter and you will target 2.4 RR. If the price doesn't go above into this area, you don't have to enter. But if this something happens like this, if the price doesn't go above it and it gives you 2.4 RR, then you won't have to enter on the retest. You have to leave this trade, okay? So if you have any questions, you can ask me. This is pretty much all. You can backtest it yourself. This strategy is so easy to backtest. You can backtest it yourself on multiple pairs. But I myself use it on the GBP USD pair. Right now, I have marked this previous swing low. Let me show you. I will clear it. I have marked this area and I will wait for the sweep of this area. And then if I get the sweep and a close above it, then I will look for entries. Okay, if the price closes above the last swing low that is made on the 15-minute, then I will enter into my trade and I will target 2.4 RR. Let's see. Let's suppose if I get an entry here, my stop loss will be around here. Okay, and my target will be somewhere around here.